Good morning, friends. Nalnakshi Swami here. I'm discussing how I was able to give reversal tips at the right time in the market. If you go and see my videos, live tips on Nifty trading, you will come to know. So I want to discuss what are the things I had in my mind before anticipating for the reversal. See, first thing, I knew the market will definitely it will come down to this level because this was the level where on intraday it stopped. It stopped and the selling was initiated in the market. You can see selling of the candles really here, and these sellers were trapped. These sellers were trapped by the continuation of the trend. So this level becomes very important. Usually you need to mark on those levels on the chart. And those levels were not mitigated. Of course, see, they are called as pending orders will be there. For the big players, most of the orders will not be cleared. So that was the level I was anticipating when the market corrects in advance. I was knowing these levels. I've already mentioned in my video, these are the levels the market can react. This was the very, very important level after, you can see 1, 2, 3, 4, 5. 5 candles means after 1 hour, it was a discount. It was a discount and sellers were trapped and the market has gone up. So here the pending orders will be there. If the big institution or the big player wants to buy these stocks, they might have put in a lot of money to buy all these sellers' money, and they have to come back to that level to mitigate. Mitigate means only when they come there, they will get profit. And if they go above, that was the one level I anticipated. So when market was coming down, it was actually, the fall was not very smooth and swift fall. You can see the price was alternating between, you can see, I'll zoom it out. On the 6th, the opening was, opening 15-minute candle was a bullish candle, and it was first, second candle, third candle. I always wait for the 3 candles to show me the direction. Third candle was a huge red candle coming to the, almost coming to this level. Engulfing the 2 candles price action. Later, market went sideways. You can see alternate, it was in a range, alternate green candle, red candle, green candle, red candle, green, red candle, green candle, and a huge fall off. Fall off, and it was almost near to my level. There was also one more level in the, because we do not know where the market will stop. It is a big players play. You can, as a retailer, I must be very careful. I must watch all those things. This is a big player place. So I was keenly watching that. And also, when I started seeing the, without any indicators, you can make out, see price here in this area, price, it was a lower low, inside bar and a lower low. This is an inside bar, stop, pause in the momentum and a lower low, and then it started making higher high. You forget all these things. It is making a trendy move in the market. After seeing this itself, I was able to make out there is halt in the market exactly around this level. So, and the big player is trying to go up. So I posted on the my short tips, tips on the Nifty trade. The reversal, asked all the people to cover their shorts. Till that time, even the put options were increasing in the even the data was showing, put call ratio was showing negative data. And here one thing, if you see here, if I go and see the market, this was the market made a low here, and another low was formed in the year. When you see here, RSI also sometimes it is a leading indicator. Because why it becomes a leading indicator is when the price is alternating between green and red, positive and negative price action, you will not be able to gather very good information, internal information. This RSI will give you internal strength of the price action by showing divergence. You can see divergence. I was able to see the divergence in the RSI. RSI acts as a leading indicator when there is this type of price action. Sorry. 1 minute. This type of price action. You can see I'm not able to draw because 1 minute. Here it is coming. Let me draw this. You can see price is making lower low and it is making a divergence. Price is making lower low, it is making RSI is making lower high. So let me reset that. Not only that, this is one indication. The second one is first one is the price levels, anticipated price levels in advance. You can anticipate the levels in advance. So try to see the market properly so that it will get you very, very help. And also, if I draw the trend line on the RSI, isn't it a different thing? Yes, of course. I have found my own edge by putting the trend line on the RSI. Even the trend line breakout. See, if I place the cursor, I'll put here vertical line. You can see even the RSI is showing the divergence and it is crossing above the moving average. This is the RSI moving average. I'll go to the settings. I'll show it to you. See, in the moving average inputs, they have put RSI length 14 and simple moving average 14. It is crossing above the simple moving average 14. That means RSI is showing more strength, and when it is crossing above the 14 period moving average, it's a very good indicator. Even the moving averages and the price is not even the short period moving average is lagging. So these are the things you need to watch in the market, be aware of it. You should anticipate these levels in advance and you should participate only when there is a confirmation. So these are the things where I was able to recognize the trend reversal at the proper time so that you will be in a proper trading action. See, I was able to read the candles one by one, candle by candle. If I see the price of the candle, it is making higher high, higher low. Trend structure was building in the market. So hurdle was this one. When it started crossing this, change of character appeared in this candle. Change of character appeared in this candle, and you can see the alignment of the moving averages. Shorter period coming up, and next shorter period, 20 period and 50 period, all are aligning themselves. So All are aligning after the movement. Here the RSI is showing divergence before itself divergence, it is showing divergence in the move. And also, most important, I anticipated this level, the price to react because of this. These are the three things which made me to tell you people the market is halting and ready to reverse. So you need to master this. You need to see the things on the chart. Only when you see the things on the chart, you will do on your own. My intention of this video is to help you traders to see the things properly. How I see the things, you also should see the things in this way. If you trade in this way, you will be profitable. And this setups usually comes near the support. See, this was the strong reaction near the support. You could not see here. It was short of this level. It could not go past this level. When it came down to this level, the swing momentum was very, very strong to cross all the hurdles of these sellers, and it was closed above all the of going above this level, that is 22,533. That is S&P. I am on the index futures. I'm explaining it to you. You should trade by seeing the index spot market. Anyway, all the markets will show the same thing, price action. So now it is bullish. It is bullish and the market has come down to this level, and we should see RSI, what it is doing. RSI is here. When the price was here, the RSI level is 78. We should see whether the market is going to catch up here, and also sometimes it also shows divergence over here, even after making higher high. That will tell you some caution. So you need to be careful. Actually, you need to see everything in the chart. Everything in the chart. Indicators will also help. Indicators, of course, price action will tell you whether the trend is fading or trend is. When the trend starts fading, what happens? Market goes sideways. How the market goes sideways? You will see prices alternating with red and green candles. Red and green candles. When the price starts alternating with red and green candles, you should think there is a pause in the momentum. When there is a pause in the momentum, you should stop, because these are the places where institutional fund managers or big players will take off their position and make the retailers to play within that game. So poor retailers with less money, they cannot push the market or create trend structure in the market. Price trend is created by the big players. You should always remember that. When you remember this, trend is created by the combined action of the retailers and the big players. Big players are the inside strength for this trend structure. So when the trend structure is fading, momentum is fading, that means big money is halting. It is not taking. In between, they will be playing to facilitate the retailers to go in a wrong way. That time, you should stop and stay away in the market. If you stop, if you take a break, do not trade on all days. If you take a break on such time or such period, you will be profitable. See, this was the area actually in the retailers played. They could not push the market higher. So then the big money took control of it to push the market down, and also it created an illusion that it is going to go up, so that to trap the retailers, and they push the market to their desired level, where the order block was there and their pending shares were exchanged, and they took the market to the higher. So this is the game. This game is played on and on in the market. So if you start recognizing all these things, you will become definitely profitable. So thank you very much, friends. I'll be coming up with this type of videos to help you people. Please kindly subscribe and support. Watch my videos. Definitely there is more content in my videos. So if you can learn more things. Thank you very much. Nalakshi Swami signing off.